Hey guys, Sam here. Tuesday afternoon. Had a request to take a look at LISK. Now I've got it up here in front of us. These are both daily charts, one on Poloniex, one on Bittrex. Just thought I'd show you the contrast. I've also got it on the left here against the dollar and on the right side against Bitcoin. Now, when someone asks me to look at a coin, I want to consider it, is there a trading opportunity here and is there a teaching opportunity here? And there happens to be both. So I thought I would approach this just as we do, again, demonstrating the consistency of approach. So if someone were to mention a coin to you, you read about it on Twitter or on the web or somewhere you were interested in a coin and you weren't, deeply familiar with it, I want to encourage you to do the same thing that I do, which is go over to CoinGecko and see where that coin ranks on their scale. And again, you get a little recap of their metrics that they're using to score these. And we know, we may have even done an analysis on this before. I've traded LISK several times this year. And it has been a tough coin to trade. In fact, I'm going to show you my last trade in it. But my point here is that we can see it's in the top 10. So we know this is a major cryptocurrency. It's a very high ranking on this metric scale. So we know that's a contender that we want to go take a look at. So then I went, again, consistent with what we did this morning, I went over to our crypto market and looked at it relative to performance. And I can see here some things that make me want to look further. Well, so today it's down. It's down. But for the week, we're up. So we're getting a retracement today. But look at these metrics for LISK on the year. I mean, these are, where else other than crypto are you going to see that kind of return for the year? It's just insane. That's just remarkable. It's not, that's LISK against the dollar, and it's not so bad against Bitcoin as well. But down today, that's just what I want to see. So potentially we've got a retracement underway or a retracement that's setting up and an opportunity to position ourselves for a trade. So I thought I don't want to give you guys the impression, one, that I'm always right about the market, or two, that counts aren't invalidated all the time, and you've got to be prepared for that, and you've got to accept it. It's just part of trading. You should expect to always think, I know I'm going to be wrong more than I'm right. You have to go into it knowing that. And the most common analogy that's used amongst traders is the baseball analogy, right? So if you're right in baseball, if you're a hitter and you can hit the ball 3 out of 10 times that you're at plate, well, you're on your way to the Hall of Fame. And it's really a similar story in trading, except the key being your money management. So you can be wrong 7 out of 10 times. If your losses are small and you're disciplined about your money management, if you're only right 3 out of 10 times, you can be a very, very profitable trader. But it's not quite as black and white as that. It's the discipline of money management. It's a discipline of allowing a winner to run and head towards targets. That's why it's so important to have a target, so you're not just tempted by that natural human emotion, which is to grab onto profit and realize it and take it. Right? It's much harder to let a winner run. And it's much easier to try and rationalize a loser and say, oh, well, maybe if I move the stop down a little bit, I won't have to take this loss, right? This loss is not realized until you're out of the market. So those are the temptations that and the rationale process, and those are the true devils of trading, is your emotions. So we want to recognize that your expectation should always be, where am I wrong? Where am I out? How much am I risking? What is my potential? Those all have to go into that decision process, that decision-making process before you enter the market. So not to get too long-winded there, this is the last trade that I was looking at in LISK, and a trade that I took, and you can see exactly why, right? So this is a trade that ended up being a scratch, right? And I'll show you why. So fortunately, not a big loser, but not a money maker. So is the trade valid? So you can see my count here and why I was in the trade. So we've got a clear potential Elliott count. There's our 4. We have a deeper 4. So the premise was we're in some sort of a leading diagonal, right? Reemphasizing what we've been talking about the last couple of days. We had a nice ABC. We come down deep. We wick beyond the 1, and look at the wick in that 1. So there's a little bit of a, this could just be stop running. I didn't love that, but because we had this 5-wave sequence, I'm going to try and blow this way up a little bit so you can see it. Because we had a 1, 2, 3, 4, 5 again, leading diagonal, which can only be in a 1, because we had that 5-wave sequence, and we came down to, here's our 2, when you can, carve out a little bit of an ABC. There's the 2. We come right to the 618, and we get a reaction there. We stall. Next day we start moving a little bit higher. So when you're this far, away from entry, that's a good time to tighten up your stop, right? So why keep the risk in the market? You've got a small winner, but no reason to. Either you're reducing the amount of risk, or you're just going to a break even, right? Because particularly because you're trading at the 618, right? So if your first stop was at the 65, you could tighten up to the 618, a tick or 2 below it, right? Or you could just go to scratch, which is what I did, right? And you can see that, when Bitcoin started to sell off and everything went down, in the early part of this month, well, LISK went right with it, right? So there's the stop out on this bar, right? And, I think actually I did lose a little money because there was some slippage there. So, but was it a bad trade? Was it, without sound analysis? Was it not a thoughtful trade? Was there, a reasonable technical basis for the trade? Absolutely there was. So I would continue to take that trade. If that's set up tomorrow, I would take that trade in the same way. And I come back to the point here, where am I wrong? Well, if we break the 618 or the 65, I know I'm wrong there, right? And my count is inaccurate. I am wrong about that count. As good as that looked, I'm wrong, right? So you got to just be willing to accept that. So I had it was all there. All the potential was there, but that's not what we get. That's not what we get. The market doesn't always cooperate. So I'm going to move over and go back to where we are here. So blank slate. So when I go back and I look at this, and I see this monster return against the dollar. I'm kind of tempted to look at this against the dollar. So here I'm on the left side against the dollar, and we can see right here was our big push up. Here's the retracement, and then clearly this is some sort of impulsive structure here. So I'm on the daily. Let's go to the 4-hour and see if we can look at that. So some sort of a 1, 2, 3, 4, 5, and then here's an A, B, C. Now, so what ends up happening, this ends up being, if I can find it, these are very deep retracements. Okay, now look in the context of the language we've been using recently. So I have an internal retracement here. Let's just check that, right? So from my low here all the way up, oh, look at that. Right in that little pocket between the 618 and the 65. Interesting, okay? So that gives me some clue that there's algo activity here. We got to the 50, a little stall, we get a reaction, but we come all the way down on a spike and we go into that little pocket. So there's some sort of a 1, 2, 3, 4, 5 here. A, B, C. We can clearly see a 3-wave. So it was not unreasonable, right, at that point to think that maybe you had a 2 here. Right, so there you had an ABC, and here's a 1. There's your 2. We're off for the 3, but that's not what we get. It ends up staying internal. So this is a very deep B wave retracing this 5-wave sequence. It doesn't catch the top, so it's valid. And then we come down in some sort of a C wave here, and we go through the 6-1, through the 6-5, in fact. And now we're coming back up. So to try and look at this now, you can see it's moving in sympathy with Bitcoin, right? So we have the same sort of question mark about what the structure is here in Bitcoin. Are we going impulsive or are we correcting? And of course, we'd have to draw this to that low. Well, we've gotten through the 65. That for the bulls, that's a good sign, right? That's bullish bias. We've gotten far enough through it that even if we did have a little stop running here, that's a good sign. That likely algos have turned now to the other side, right? So, looking at that, here's where it gets tricky. So, just like Bitcoin, I'm going to take this off just to clean this up a little bit. So let's go down. Let's go down to a 1 hour. Okay, so. I'm just going to take that off. So here are the question marks. So, first thing we do is just start pulling fibs, right? Before we even get to a wave count, let's see what's happening on the fib structure. Okay, well that's a good sign. So we come down, they front run the 50, we don't quite get there, and we start to move away from it impulsively. Can we call that a 3? Well, let's measure it. We know that 75% of the time, the 3 wave is going to be, here's our target up here. If we properly identified this, if this is our 1, this is our 2, and then we're in the midst of a 3, our target is up here. This is the most likely target between the 618 and the 175. So we got a ways to go to get there. And we're going to deal with resistance on the way down. So even if I just pull what I can see, right, well, that's where we see, okay, that's the good sign that we've gotten through the 65. So good indication here. So potentially a 1, there's our 2. I prefer to see those 2s come down between the 50 and the 618, but this doesn't quite get there. So let's look at the next retracement. So if we go from this low, okay, that's a little more interesting. Okay, so now we get overlap here. So if this is the 1 and we have overlap in the 4, then this can only be a leading diagonal, which can only be found in a 1 or an A wave. So likely, if this is going to continue, this is some sort of a 1 wave that we're putting in before we start a deeper retracement. But we've got a target up here. So we have a first target just on the fib retracement of the -23. To get up here, now we're putting an Elliott count on it, and we're saying, okay, I'm confident in what I'm seeing, that I see wave characteristics that give me some sense that I could be looking at this. Okay, now we're on a 1 hour chart. Potential, right? We know that the 3 wave has to at least be 100% of the 1 wave, which is right here. So, minimum targets are right here. So is there a trade there right now? Well, I would say not yet. I like what I'm seeing. Let's take this off just since we've got our target marked. So now if I'm in my third wave here, or some degree of my third wave, well, let's carve it out. Let's see what we get here. So there's our 1, 2, 3, 4, maybe some sort of 5. Let me change that color and take that down a degree. Let's go to the micro. Okay, so potentially, but my 3 is up here. So I'm going to need to see, an extended 5th, or likely this is my 3rd, and to get here, remember, waves within wave, guys. Waves within waves, guys. So we got to have, this has got to be impulsive. We've got our expectation for the target up here. Can we get there? If that's a 4, can we get there in a 5? Well, we can, but that's going to be an extended 5th. Happens all the time, but we're going to need to see impulsive characteristics here in that 5th extending beyond the 3. Can certainly happen. Or we top out here and then we start another process before we can get up to that level. So we have contenders. There was definitely a trade here this morning. If that's our 2, we see it again. Yeah. We see it again, right into that little pocket. The 1 holds deeper than you might have preferred. So, potentially if you were very tight on the stop and you're on the other side of the 65, you got stopped out. And then look how quickly it reacts. That's just the bitch of it, right? So what keeps it valid? Well, we hold the one high. We hold above that, right? That's not accidental. So if you're stopped out, then you've got to reevaluate. Do I want to go back in? Well, let's go down to the 15 minutes since we're looking at short-term trading today. That was just a quick FU from the market. You had to be right on the trigger to get that again. So you're stopped out, and then it immediately reacts. Right? That's just the market effing with you. That's welcome to trading, right? So that's so you'd also look and say, well, perhaps they're pulling from this low. You know, you've always got to check. That's why you got to check both of them. They could be going from the all the way, and that ends up being it. Right? So if you're working off the 2, stopped out, and then you said, oh well, maybe they're working off that. Well, then you're scrambling to get in again. You took a very small loser, very very small. I mean, less than $1. Very small loser, but you a little bit of a chase to get back in, which you might be doing because now you've seen, oh, I've got a 50 here, and perhaps we're on trend here based on the size of that reaction. So the people that catch this, now we're getting a little rollover here, likely to be some profit taking. So where's the trade? We got to wait for this. We got to wait for this because we're looking for a 2. We're looking for a 2 because waves within waves. We're now looking for this. Right? Do you see it? What are the characteristics? What am I looking for? Can I get there? How can I get there? If that's the 3, that's my 4, well, then I know going into my 5, and I'm looking for an extended 5, that I got to put in a 2. Where's the highest probability for a 2? Between the 50 and the 618. That's the trade I'm waiting for if I want to be getting long in LISK. Right? I may well have already been stopped out and I didn't want to chase and missed it. Well, now you got to wait. You got to sit on your hands and wait for it to set up again for a reload. Nothing wrong with it. It happens all the time. Get used to it. You're stopped out and the market takes off, and it turns out your analysis long-term is right. But you're not in the market. That's the bitch of it. Right? That's just what makes this so difficult. So now you got to sit patiently and wait and say, okay, I understand. I got it. I see what could be happening, because it's always just a possibility. Because for all we know, this is the top, and if we go out to that longer term time frame, let's go back to the 4-hour. We don't know with certainty. This could just be another deep retracement before we start A, B, and then we're going back down. We don't know. We don't know. What gives us confidence? Well, look at those returns, right? Look at those returns. So we definitely want to be leaning to the bull side, right? We want to be looking for buying opportunities. So let's take it back down to the 1 hour. Right? Can we see a path to getting there? Can we see a path? Can we make that make sense? Yeah, we got to get a lot of activity here in this third wave. But if we're trying to, look what you're trying to do here. Okay, this is you just kind of got to get comfortable with this. We're in the third wave. Within the third wave, we are potentially in the first wave of the third wave, and now we're trying to catch the wave 2 of either the wave 5 or the wave 3 of that wave. So that's why you have to continually recognize the fractal nature of the Elliott theory. Is that it's waves within waves within waves within waves. So that's why you have to be constantly adjusting to how the market responds. This is the potential roadmap, and it's valid technically. It very well could be the case, but we don't know with any certainty. We don't know this is going to happen. Where's the next opportunity? You never know. You never know. Where's the next time we can get into the market with good risk reward profile? Right here, because I can trade this. I can trade at the 50 if I blow this up. I can trade at the 50 and be out at the 65. Do the other tick of the tick beyond the 65. I can trade that for a very small risk reward. If I want to give it more room, I could go to the 786. So let me I'm going to take that off, and let's look at it in the context of risk reward. Zoom out a little bit. Okay, well, there's a logical first target. So off of this, off the larger, we've got the negative 23. We also know we've got 100% here. So we've got some confluence of fib relationships here. So if I look at a long trade, and I'm going to be a buyer at the 50, and here's my first target. First trade, my stop might be just under the 65. There's 8 to 1. 8 to 1. All right, is that good for you? Does it mean you're going to have a winner? Absolutely not. I mean, this could easily just keep going, and the count is invalidated, and we got to look at it again and say, well, now what is it most likely? The waves are fluid, right? Sorry for the bad pun, but it's just the way it is. That's just the way it is. Where's our long-term potential? Now look at that. So why do we want to be in this market? That's our most likely target for our wave 3. Remember, off of this. Now we're at 16 to 1. All technically valid. That's why we're trading the markets. That's what we're looking for. Right there. Wave within wave within wave. Where's a safe place for me to get in that could be a 16 to 1 winner? Could be. All right, guys. Shoot me questions if there's crypto that you're interested in. Some of you are communicating with me a lot, others not at all. So it helps me if I know if you're struggling, if there are particular areas that you would like me to review or go over with you, just give me some feedback. If there's a particular coin that you'd like to have me look at, let's review it in the same process, because my goal here is, of course, for eventually. So you're doing this on your own because you've seen it with enough repetition. You know how to approach it. You know the variables. You know the tendencies and the wave characteristics. What is this most likely? What kind of target might we see? Eventually, you won't need me. Okay, I'll wrap it there. Back to you soon, guys.